What is the cash flow report?
Well, the first thing is to say the cash flow report we are talking about today is not the statement of cash flows from your bookkeeping.
Right.
That's a very valuable report. It's historic. It tells you a lot of things. That is not what we're talking about. What we're talking about is a practical list of information that you can receive on a regular basis that is very useful to you in managing your cash. And also, we're going to talk about guiding your future actions, right?
Yeah.
So, simply stated, matter of fact, I was overcomplicating it. You set me down before this. I was going, oh, I've got to teach them how or tell them how to write this whole thing and it sums here and has that. Go, no, 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 no. This is going to be something your bookkeeper or your accountant, and maybe even you have to do it, but your bookkeeper will have on your desk Monday morning at 9:00.
Yep.
Or Tuesday at 1, whatever, on a regular basis. And it's a report that's going to list different information. It will start with your current available cash. And that doesn't mean greenbacks. That means cash in the bank taken from your balance sheet, not from your banking app, because there's still such things as outstanding payments that haven't cleared the banking app.
Right.
So it starts with cash. Then the next thing on a list is a statement of your aging accounts receivable.
So
In
let's
other words, that
and let's
everybody who
define that
yeah,
really quick because I think we all know accounts receivable. It's money you haven't been paid yet, but you've already invoiced. But what do you? Let's
right.
define that aging term for everyone.
Well, an aging accounts receivable report readily available in QuickBooks or any kind of software that's any good will show you what's current. In other words, you're allowing 30 days, and it shows how much is current. It's not overdue yet. It shows 31 to 60, 61 to 90,
Right.
and out to 120 days. Typically, or beyond that. So it shows you what, by looking at it, you can quickly see, oh, Bob's 30 days past due. I'm going to assume we're going to collect that one and go after. But by having that report in front of you, I guess, let's just say we do have it. We'll talk about how to use it here in a minute.
Yeah. Yeah.
But so you've got your cash, you got the amounts that are due you as accounts receivable. You have your known expenses for that week. From historic, like maybe the rent's due that week, you've got a payroll due that week, payroll taxes due that week, maybe the insurance payment is due that week. That's a lot of things all due in 1 week. But you have the ability to know what is due in a particular week. And if it's something that's due in that month, but not necessarily that week, that's a place that you have that you can control your cash flow. You can pay it or not pay it.
Right.
So we've got accounts receivable, we've got cash, accounts receivable, known expenses. The next thing you'll list are debt payments due that week.
Right.
Okay. Your mortgage on your bank is not an expense, so it won't be in known expenses. But if it's due, you need to put it down because you're going to have to pay it
Right.
right? Or at least you need to be aware of it. Then you list an aging accounts payable. And that is money that you owe your suppliers, typically suppliers, and it's also aged. If your suppliers give you 0 to 30 days, you can say, hey, I don't have to pay those this week. But if you got some things that are hanging out there, you go, I really need to get some money to these guys or they're going to shut me off. So you have a list of what you have some flexibility, but you're going to pay. And then after you subtract all that, so you got the plus of the cash, plus of the ARs, accounts receivables you think you'll collect, minus the known expenses, minus the debt payments, minus the accounts payable you choose to spend, you will have an ending balance, hopefully positive. That ending balance will become part of your planned beginning balance next week, which
Right.
you'll collect money that you collect next week. Oh, I didn't put that on there either. Well, I did under accounts receivable. There might be some cash sales and things like that that
Right.
you expect to come in. But basically, you're disciplining yourself to understand your business. You do this anyway.
Yeah.
You do it driving around. You open
Exactly.
your app at the stoplight, and look, oh, yeah. And then you try to remember, but the the federal FICA payment hasn't come out yet. Payroll's coming out Wednesday. And so
Right.
you're doing it trying to keep track of it. Well, if you have good books and you get into a rhythm of doing this, you will get known quantities that are matched in time, right? So you wanna make sure your receivables are due at the same, that same week as the correct amount.
Yeah.
Um, and then you can predict, and it gives you the flexibility to say, "Hey, I am going to be short cash. I'm just not gonna pay this supplier this amount."
Right.
And, it's a tough position to be in, but a lot of us we've all been there,
Mhm.
where you start making those choices.
Well, I think
So I don't know, hopefully that's clear.
yeah, I think it's clear. I think everything makes sense. The big thing is everyone has done this already. It's probably been in their head. It's typically the reactionary, not the proactive rhythm that people have. But this is the step that they take when, oh crap, I just got that big bill that I forgot about, or how am I going to
Right,
meet payroll this week? You sit down, you think about how much cash do I have? Who owes me money? What else do I need to pay? What can I delay payment on? People are going through this practice already as a business owner, but it's usually not a proactive approach where they're every Tuesday getting the cash flow report and making decisions. So
right.
I think that's the big difference for everyone.
And doing it in your head, I think you said this, but is always wrong.
It's always wrong.
I mean, if you're a one-man band and you've got 3 accounts receivable and no employees, you probably keep pretty good track. But
Right.
you get past that, you're just wrong. You
Yeah.
just forgot something or misestimated something. You just did.
There's just always
So,
something. There's software fees. There's things that, the annual software that you forgot that you don't, you pay for,
yeah,
but you
good.
forget about it, right? Then you have you already mentioned all the taxes that come out for employees, workman comp insurance that comes out. Maybe if you only pay that once a year, that could hit you hard. There's quarterly payments that you have. There's bonuses that come up, there's interest payments, there's credit cards for you and for employees, and then there's people that bill you late and you forgot about the invoice. I mean, there's just so many things that happen. You've got to stay on top of it. And so having this regular rhythm, I think the weekly is probably the most realistic for a lot of listeners. And if you can do it more than that, great. But weekly is a great place to start. And it just gets you aware of the score. It allows you to really keep score at a very basic level and a current level where you can see where you
Right.
stand and what you need to do to score more points.